and welcome to Capital Market Live on Channels Television. I'm Will Libong. First things first, as always, let's check in on the markets and see how your stocks perform for the week. We begin with Europe, where markets closed slightly lower on Friday as investors continue to assess the impact of inflation and production data from the US and the UK. Alongside company earnings, the UK's FTSE 100 closed 0.1% lower at 8,000 points after it closed above the 8,000 level for the first time on Thursday. The blue chip index has strengthened on bumper energy profits and inflation coming down faster than expected. France's CAC 40 was down 0.25% and German's DAX was lower by 0.3%. Now to Asia, where markets traded lower on Friday as investors digested more economic data out of the US and more hawkish commentary from the Federal Reserve. In Japan, the Nikkei 225 ended the day 0.66% lower. Chinese markets also were traded lower on Friday. In mainland China, the Shenzhen component fell 1.6%. And the Shanghai Composite also was down 0.77% to finish at 3,224 points. The Hang Seng Index and the Hang Seng Tech Index traded 1.25% and 2.42% lower after the release of its 2022 census and unemployment data on Thursday. Now to the U.S., where stocks were mixed on Friday as stubbornly high inflation and a rebound in rates continue to weigh on investor sentiment. The Dow Jones Industrial Average rose 129 points, boosted by shares of Amgen and United Health. The S&P 500 shed 0.28% to end the day at 4,079 points, and the Nasdaq Composite fell 0.58% to close. Energy was the biggest laggard. Devon Energy dropped 4.29%, dragging down the S&P 500. Stocks were mixed on the week as well. The Dow ended 0.13%. For the week, its third negative close in a week for a row. The S&P 500 has shed 0.27% for the second week, a second negative week in a row as well. The Nasdaq rose, however, 0.59% for the week. Now, the local boss, that's in Nigeria, posted its first weekly decline in the month of February following renewed risk-off sentiment by investors. The loss recorded on the final trading day, that's about 1.3% down, proved sufficient to wipe out the cumulative gains of 0.4% as of Thursday. And this was driven primarily by sell pressure on Airtel Africa. The all-share index shed almost 1% week on week, and yet-to-date moderated to about 5%, but still in positive territory. Now, analyzing by activity level, trading volume and value decreased by 20.1% and 22.3% each. Across the sectors, insurance, oil and gas, consumer goods, all the industrial indices advanced while the banking index declined. Top performer for the week, Triple G, maintained its position on the gainers chart on that leaderboard, followed by Living Trust Mortgage Bank, while CWG PLC led the underperformers. The trio of GTCO, UB and FBN Holdings contributed a lot to the equity volume and value traded in the week. Meanwhile, the NASD OTC Securities Exchange Index closed the trading week in positive territory. The unlisted equities index rose nearly 1% as the exchange recorded a slight gain of over 8 billion naira. Also, turnover was quite impressive. Volume traded climbed by over 1,700% to 94.58 million units, while value rose by 175% to close more than 83 million naira. Geofluids PLC topped the gainers chart for the week, followed by Central Securities Clearance System. There were no decliners this week. Now joining me to review market activities and its performance is Professor Uche Waleke, is the Professor of Capital Markets, Nasarawa State University, and the President, Association of Capital Market Academics of Nigeria. Many thanks for joining us on the program, Prof.
Thanks so much, Will. My pleasure.
Prof, the equities market has done quite well so far, but it closed in the negative. That's the first decline we've seen in February. In your view, what's driving this, and is this the beginning of a correction?
Well, I wouldn't say so. The equities market, that's talking about the main boss, has been positive all through since Monday. The decline we saw happened on Friday, and because it was huge at minus 1.31%. That's why we now saw the plunge by 0.96%. Recall that the previous week, the market was up by 0.21%. Now, I will attribute all of that to the fact that we are still in the earnings season. Corporate earnings are driving performance of stocks in the market. On Friday, particularly, what happened was the huge sell-off in the stocks of Airtel, for example, and some banking stocks. Airtel fell from 166.50 to 1,560, lost 100 naira. So that dragged down the market. So I would say generally corporate earnings have been majorly responsible for the performance of the market.
Okay, we'll come back to that, but let's spotlight quickly on Triple G, which outperformed this week by over 45%. What are market players looking at?
Okay, yeah, in case of Triple G, it's quite interesting for a stock that started the year at, I think, about 0.779, that's 79 kobo, currently selling at 1 naira 99 kobo. As a matter of fact, the current price of Triple G is highest, is 52-week high, 1 naira 99 kobo. The 52-week low for Triple G is around 73 kobo. So it's done remarkably well. And for me, it's principally because investors are expecting that the 12-year performance of Triple G is going to be better, gleaning from its 9-month performance. As you know, Triple G's year end is March 31st. So far, what we have seen with respect to Triple G is performance between for 9 months ending in December. And if you take that performance alone, as a barometer, Triple G has done well. Earnings per share, for example, has improved remarkably. I think from around 7 kobo, they're about to 20 kobo. That's quite remarkable. Earnings, have also improved from a little above 36 million to over 100 million. Okay. So the numbers are good for Triple G, and I think that's what investors are. Yes, investors
definitely eyeing that stock. They're definitely eyeing that stock, Prof. And speaking of earnings and corporate disclosures, Infinity Trust Mortgage Bank PLC also submitted their unaudited financial statements for the full year of 2022. Now, if you've seen it, how would you assess the company's performance relative to their previous year's performance?
Yes, I've seen the financials of Infinity Trust Mortgage Bank. Of course, it's one of the leading primary mortgage banks in Nigeria. Again, just as I said in the case of Triple G, for Infinity Trust, overall the numbers are also looking good. If you look at whether you're looking at earnings per share or you're looking at even the asset size that grew, the only thing that dropped in the case of Infinity Trust happens to be the shareholders fund. Shareholders fund that fell from maybe 6.7 trillion to about 6.5 trillion on account of a drop in retained earnings. But the other numbers are, in my view, an improvement over that of the previous period. Take, for instance, the interest income. Interest income, increased them, quite remarkably. And if you also, dive down a lot more into maybe some efficiency ratios, which of course investors will be interested in, you will find that cost to revenue ratio also dropped, which is good. Operating expense to operating income ratio fell from 55% to 49%. And if you're also looking at personnel costs to overall total expenses, that also dropped. So that gives you an insight into how the company has been managed over time. And I think that's positive for the company. and it's something that should excite investors. The only thing I see that may be weighing down on the price of Infinity Trust, because it's currently selling at $1.27, and it's been that way for a long time, is this compliance status code that is attached to the share price of Infinity Trust. If you look at Infinity Trust, on the exchange, you will see against the name, you will see BLS. BLS stands for below listing standard. So when a company has that kind of tag attached to its name, of course, it also sends some signal to investors. But overall, I think using the financials of Infinity Trust as a guide, the company has a lot of future.
So you talked about interest income being boosted in their earnings for this year, the full year 2022, rather. That means, that's to say that the high borrowing interest rate environment is actually doing some good for these companies, because it was boosted by loans and advances to customers and, commission, credit-related fees and commissions. So we'll say that the high MPR in Nigeria is contributing to the high earnings of these companies, wouldn't you say, Prof?
Yes, of course, you can also talk about the fact that a company too is also having more customers. The marketing drive is also paying off. When you have more customers, more people, coming to take loans. Of course, that increases your assets. Loans are assets to banks, and on those loans they earn income. So if a bank's interest income is increasing, it's not necessarily because the interest rates are going up. Of course, that could be part of it, but also it's also a function of the marketing effort, of that company. Okay,
so we also saw UBA, that's United Bank for Africa, announcing their Q3 results. They've approved the Q4 results for 2022, but in expectation of what we are to see in the numbers in March, what would you say we should expect from UBA? Would they replicate the outstanding performance they had in Q3?
Well, I think so. I think so. Again, what is my guide? My guide is the 9 months results of UBA, January through September. If you look at those results, you will also agree with me that in terms of the fundamentals, talking about earnings, UBA also recorded an improvement. Earnings per share equally increased. The same thing with asset size. UBA's asset size, I think, went from that period of about 8 trillion to over 9 trillion. So if you look at this in total, that should also give you an idea of what the 12-month performance, is likely to be. And I also think that should rub off positively on the share price of UBA. I see the share price, hitting 9 naira, very soon.
That's a lot, Prof. We'll look forward to that. But we'll take a quick break, and when we come back, the conversation continues. This is Capital Markets. Do stay with us. Welcome back. If you just joined us, this is Capital Market Live on Channels Television, and we've been reviewing activities in the capital market, and Professor Uche Waleke is still in our Abuja studios to give us more insights. Prof, there have been so many things happening this week. We've seen the cash crunch, the fuel crisis, everything just happening all at once. Now, this cash squeeze, which was caused by the CBN currency redesign, has continued to pose challenges in business environments, yet the stock markets, going by the recent performance, appears to be unperturbed. Why do you think this is so, Prof?
Well, our equities market in particular, one can describe as resilient. And this is not the first time. Will you recall that even during COVID, the stock market, emerged the best in the world, posting gains of over 50%. And last year, 2022, despite economic headwinds, the market also came up with 19-20% appreciation for investors. So I think our market is one market that is quite resilient. And remember too, this is one market that is forward-looking. So usually we don't expect that these things impact the market almost immediately. The market is forward-looking, and if the market is seeing a future beyond today, that is what it responds. Remember, the capital market is for medium to long-term funds. So it responds, as I said earlier on, to events more like in the future than now. But that is not to say that we are not, the market is not feeling the impact at all. We saw what happened on Friday when the market tanked by as much as minus 31%. That may not be unconnected with the cash crunch, to use your word. Okay. And if you also noticed that is the banking stocks, took a hit. Fidelity Bank, for example, the Fugas, apart from First Bank, the Fugas, the UBA, Jitco, Zenith Bank, all fell, though marginally. Zenith Bank dropped to around 25 naira, GT to around 25 naira. So these happenings now, okay, may be rubbing off on the market, but not, as I said, the impact will not be significant because the market is resilient and is more forward-looking than a reflection of what is happening today.
Okay, Prof, you're talking of resilience. Would want to break that down more, looking at the numbers that came in from the NBS, that's the National Bureau of Statistics. We saw inflation numbers hotter than expected, from 21.34%, what we saw in December, now 21.82% in January. And what impact do you think this is likely to have on the capital market? We've not seen any impact from the previous inflation numbers. And could you say this is linked to the wide gap, the disconnect between the MPR rate and the yields in the fixed income market?
Yes. Of course, there's no doubt that investors take into cognizance inflation rates, but not just inflation rate, but inflation expectation. So when the expectation is such that inflation rate is going to be on the upward trend or trajectory, combined with the central bank's MPC monetary policy tightening, of course you would expect that would impact the market. But for now, what we have seen is, remember, in December, we saw a bit of moderation in inflation rate. And then it went up again in January, from 21.34 to 21.82. But that may not be enough to really exert any negative impact on the market for now. As I said, the market takes into account a whole number of factors. And remember, too, that the bulk of investors playing in the market today are domestic investors. Because they're domestic investors, particularly the institutional investors, the pension funds, they tend to take a longer term perspective, not just a short-term perspective. So that's also what is also giving our market that level of resilience. So except the inflationary problems is sustained, that you may not have that affecting the market quite significantly.
Okay, so Prof, next week we're going to just get an overview or outlook of what next week would look like. The presidential election is scheduled to hold next Saturday. We're also going to be seeing earnings coming in next week. How do you see this affecting each other, bumper to bumper, coming to the market? How will this impact performance in the coming week, Prof?
I think the coming week will witness mixed performance. A number of investors will sit on the fence to watch how it turns out. But I also think that immediately after the elections, the market will rebound, and the earnings season will also continue to rub off positively, on the market. Next week is going to be, as I said, mixed. Mixed by that I mean the usual, up and downs. But what is important is that the investor sentiment has remained strong, has remained positive, going by the market breadth. Last week, despite the fact that the market tanked, we saw, more gainers than losers, and that has been the trend for quite some time. So that's a signal that investor sentiment is still strong. So this next week is peculiar in the sense that it's an election week. So a number of investors may not want to, show their hand. But immediately after the elections, no matter who, regardless of who wins, because all the three or four leading candidates are market friendly, I think the markets, will rebound, to levels even before 2023.
So, Prof, do you think, just very quickly, do you think we're going to see a return of foreign investors in the market? Maybe in a sentence, in a word, a phrase. Do you think we're going to see that come back to the Nigerian capital market?
Oh, we are going to see the return of foreign investors in this market, particularly in the second half of 2023, after this wind of uncertainty and so on, blows away. So, of course, foreign investors will come in, and as I said earlier on, interestingly, all the leading presidential candidates are market friendly, and they're talking about putting in place an environment that will attract foreign investors, and a private-led economy, as all of them are preaching, would of course attract foreign investors into our economy. So I'm optimistic.
Thank you, Prof. We'll share your optimism and hope to see them come into the market. Thank you so much, Professor Oche Uwaleke, Professor of Capital Market, Nasarawa State University. Many thanks for your time this evening.
Thanks so much, Will.
But before we go, let's look at an interesting development in the capital market space. The Securities and Exchange Commission, SEC, and the Nigeria Export Processing Zones Authority, NEPSA, have announced plans to begin the listing of free trade zone enterprises on the stock exchange. The Director General of the SEC, Mr. Lamido Yuguda, says the initiative is aimed at pulling more players into the stock market. The DG SEC explains that the Commission is interested in the governance structure of the free trade zones enterprises, as it was fundamental to the declaration of profits and sharing of dividends. On his part, NEPSA says the prosperity and wealth of the free trade zone will be effectively extended to the investing public through the stock market. According to NEPSA, the initiative is a sign of greater things the authority and the Commission can do together to position the country's business environment and the stock market for global competitiveness. And that's it on Capital Market. Do join us same time next week. Don't forget, you can watch this again on our channel's television page on YouTube. Also follow us on our other social media platforms to get updates. I'm Will Ibong. It's bye-bye for now.